Welcome. If you're like us, you want to get beyond the headlines. Really understand what's driving major trends.
Yeah, to sort of peel back the layers.
Exactly. And today, we're doing just that. We're taking a deep dive into ARK Investment Management's, well, pretty bold 2030 price prediction for Bitcoin.
It's definitely generated some buzz. What's interesting about ARK's analysis isn't just the final number, but the whole model behind it.
Right.
They've laid out a detailed case based on how they see Bitcoin fitting into the future financial world. So our mission today is really to unpack that model.
Look at the assumptions they're making about adoption.
Precisely, and try to get a handle on what could actually drive these, well, potentially huge price increases.
And huge is definitely the word. I mean, the range they're talking about.
Yeah.
It goes from a bear case of, what, around $300,000?
Roughly. Yeah.
All the way up to a bull case scenario hitting $1.5 million per Bitcoin.
It's quite a spread.
It is. And they stress these aren't just plucked out of thin air. They come from analyzing different total addressable markets, TAMs, and then estimating how much of those markets Bitcoin might actually capture. So, okay, let's get into the mechanics. How did ARK actually calculate these numbers?
Sure. So at its core, the method is about projecting the total capital they think could flow into Bitcoin from different places by 2030.
Okay.
And then they divide that total sum by the Bitcoin supply they expect will exist then, which they estimate at about 20.5 million coins.
So there's an actual formula.
Yeah, basically.
Yeah.
Price target for 2030 equals the sum of each TAM in 2030 times its estimated penetration rate, all divided by that 20.5 million Bitcoin supply.
Right. They're looking at different sources of capital, essentially.
Exactly. Different contributors to capital accrual, as they put it, or buckets, as you said earlier.
Okay, buckets works for me. So which buckets do they see filling up the most? What are the biggest drivers here?
Well, they highlight several key ones. First up is institutional investment.
Makes sense.
They're looking at the whole global market portfolio, but excluding gold. And they project that portfolio will reach roughly $200 trillion by 2030.
$200 trillion. Wow. Where does that number come from?
It's based on about a 3% compound annual growth rate from where it was in 2024, which was around $169 trillion.
Okay, a 3% growth assumption.
Yeah.
And how much of that enormous pie do they think Bitcoin could get?
So their penetration estimates vary, naturally. The bear case assumes 1%, base case is 2.5%, and the bull case goes up to 6.5%.
Okay, 6.5%. How does that stack up against, say, gold's current allocation in that kind of portfolio?
That's a good reference point. Gold's currently around 3.6% of that global portfolio.
Right.
So you see, ARK's bear and base cases are actually pretty conservative relative to gold. The bull case, though, at 6.5%, that's suggesting Bitcoin could take nearly double gold's current share.
Interesting. So even the base case sees it becoming a pretty significant asset class for institutions.
Definitely. And it's worth noting, institutional investment actually makes up the largest chunk of the price target in their bull scenario, over 43%, but it's still a major factor in the bear and base cases, too.
Yeah, you can see why, especially with things like the spot ETFs, making it easier for institutions to get exposure. Okay, what's the next big bucket?
The next one is what they call digital gold.
Okay.
So here, they're directly comparing Bitcoin to physical gold as a store of value. The TAM they use is just the current market cap of gold,
Which is?
around $18 trillion as of 2024. And interestingly, they assume no growth in that gold market cap by 2030 for this calculation.
Hold on. No growth for gold. That seems like a pretty big assumption. Why would they assume that?
Yeah, it's a strong stance. Their thinking seems to be rooted in the idea that Bitcoin is just a superior store of value. The fixed supply, easy transfer, verification.
The typical arguments.
Right. So they model a scenario where Bitcoin essentially takes market share from gold rather than the whole store of value market growing together.
Okay, I see the logic. Even if it's aggressive, what penetration rates are they using here?
These are quite high. 20% in the bear case.
20%, wow.
40% in the base case and 60% in the bull case.
60% of gold's market cap potentially moving to Bitcoin.
That's the bull scenario, yes. And what's really striking here is that this digital gold bucket is actually the biggest percentage contributor to the price target in both the bear case at nearly 58% and the base case at almost 49%.
So even if institutions are more cautious, they see individuals and others potentially flocking to Bitcoin as a gold alternative. That's fascinating.
What else?
They also look at Bitcoin's potential role as an emerging market safe haven.
Okay, how do they quantify that?
The TAM here is the M2 monetary base of emerging market economies. They project that to be around $68 trillion by 2030, again, using that same 3% annual growth assumption.
And the thinking is Bitcoin offers an alternative to volatile local currencies? Easier access, maybe? Exactly that. The barriers to entry are relatively low, assuming you have internet access, so it could be a way for people in those regions to protect their savings from, say, inflation or instability.
Right. What kind of adoption rates are we talking about here? Must be lower.
They are more modest here, yes. 0.5% penetration in the bear case,
Okay.
2.5% in the base case, and 6% in the bull case.
Still, even 6% of $68 trillion is a lot of money.
It is. This use case contributes about 5.5% to the bear price target and grows to 13.5% in the bull case. So still a significant potential impact.
What about governments? Are they factoring in nation states buying Bitcoin?
Yes, that's another category. Nation-state treasuries.
Okay.
The TAM is the pool of global treasury reserves, excluding gold reserves this time. They project that to reach about $15 trillion by 2030, again, using that 3% growth rate.
And we've already seen some countries dip their toes in, like El Salvador.
Precisely. They mention El Salvador, also Bhutan. And they sort of speculate on the impact if a major economy, maybe like the U.S., decided to hold Bitcoin in its strategic reserves.
What are the penetration assumptions? Probably quite small still.
Very small, relatively speaking. 0.5% in the bear case, 2.5% in the base, and 7% in the bull case.
So not a huge driver of the price target right now, compared to, say, digital gold or institutions.
Not in percentage terms, no. It contributes between about 1% and 3.5% across the scenarios. But ARK seems to view this as having perhaps significant future catalyst potential, even if the current allocation is small.
Right. One major country adopting it could change the game. Okay, what about companies? Corporate treasuries.
Yep, that's in there too. Corporate treasuries. The TAM is based on global corporate cash and equivalents, which they estimate will be around $7 trillion by 2030.
And MicroStrategy is the obvious poster child here.
Absolutely. They highlight MicroStrategy's success and note that public companies held something like $55 billion worth of Bitcoin at the end of 2024.
So what are the adoption rates they monitor for corporations?
1% for the bear case, 2.5% for the base, and a jump to 10% for the bull case.
10% in corporate cash. That would be significant adoption.
It would. Though, again, in terms of the overall price target contribution in their model, it's relatively small, around 1% to 2.3%. But clearly, it's a trend they're watching closely.
Okay. Feels like we're covering a lot of ground. Is there one more main category?
There is. The last primary contributor is Bitcoin on-chain financial services.
So things built on Bitcoin, like layer 2s.
Exactly. Layer 2s like Lightning Network, side chains, things like wrapped Bitcoin, WBTC, that let Bitcoin play in the DeFi world, restaking protocols, basically the ecosystem growing around Bitcoin itself.
How big do they see that getting? The TAM must be smaller now.
It was smaller in 2024, estimated around $35 billion, but they project really substantial growth here over the next 6 years.
Oh, substantial.
They assume a compound annual growth rate, a CAGR, of 20% in the bear case,
Okay.
40% in the base case,
Wow.
and a huge 60% CAGR in the bull case.
60% growth per year.
That's the bull assumption, yeah. They stress how important these services are for scaling Bitcoin, making transactions faster, cheaper, more useful for finance applications.
And how much does this contribute to the final price target?
Interestingly, the percentage contribution is fairly steady across the scenarios, roughly 1.7% to 1.9%. It suggests they see this as a consistent foundational growth area, regardless of the overall market sentiment.
Okay, so if I'm summing this up correctly, ARK's big 2030 price targets come from adding up the potential value flowing into Bitcoin from these 6 main areas: institutions, digital gold, emerging markets, nation-states, corporations, and on-chain services based on their different adoption scenarios.
That's the core of it, yes. Each area has a potential market size, an estimated Bitcoin penetration rate for bear, base, and bull cases, and the sum of all that capital inflow divided by the 20.5 million Bitcoin supply gives you the price target.
Got it. Now, I also remember reading something in their analysis about active supply or liveliness. Can you explain that a bit? It seemed like a different way of looking at it.
Right. That's kind of an interesting refinement, or maybe an alternative perspective they explored. The basic idea is simple. Not all Bitcoin that has been mined is actually, active in the market.
Like lost coins or people just holding long term?
Exactly. Coins that haven't moved on the blockchain for years. They use this metric called liveliness based on on-chain data to estimate the proportion of Bitcoin that's actually circulating versus the amount that's just sitting there, potentially lost or held very tightly vaulted, as they put it.
And what does that liveliness metric suggest?
They observed it's been hovering around 60% since early 2018, which implies that maybe around 40% of the total Bitcoin supply isn't really participating in the active market. It's effectively off the table.
Okay, so how does that change the price calculation if you only count the active coins?
Well, if you take their same projected capital inflows for the different scenarios, but instead of dividing by the total supply of 20.5 million, you divide by only the active supply, say 60% of that total.
Then the price per active coin goes up.
Significantly. Using that 60% active supply figure, their original bear case assumptions would point to a price closer to $500,000.
Instead of $300,000.
Right. And the base case jumps from around $710,000 to roughly $1.2 million.
In the bull case.
That goes from $1.5 million to about $2.4 million.
Wow, okay. That's a massive difference. So why did ARK focus on the lower numbers based on total supply for their main targets? Why not lead with these higher ones?
That's a good question. They present the main targets, the $300 to $1.5M range, using the total supply, which is definitely the more conservative approach.
Wow.
They seem to frame the active supply calculation more as an experimental model, maybe something to show the potential extra impact of Bitcoin scarcity and all the hodling behavior.
So it highlights that a lot of Bitcoin might not actually be for sale, potentially pushing the price higher for the coins that are available.
Exactly. It's another lens to look through, emphasizing scarcity, but their official forecast sticks to the total supply figure.
Okay, that makes sense. But, as ARK themselves would probably be the first to say, these are forecasts. They're built on assumptions.
Absolutely. Critical point. There are huge uncertainties here. If those TAMs don't grow as expected, or if Bitcoin's penetration rates are lower than they predict,
Then the targets won't be hit.
right, none of this is guaranteed. And they're very clear this is just their analysis for informational purposes, not investment advice.
Of course. So as we kind of wrap up this deep dive, what are the main things people should take away from ARK's work here?
I think the core message is that their big Bitcoin price targets for 2030, that $300 K to $1.5 min of range, aren't random. They're based on a pretty detailed view of how Bitcoin could potentially weave itself into different, really significant parts of the global economy.
Like institutional portfolios, the gold market, emerging economies, even company balance sheets.
Exactly. And the final price really hinges on how much Bitcoin manages to penetrate each of those markets. The degree of adoption is key.
And that wide range in their targets really hammers home just how uncertain that adoption path is.
For sure. The bear, base, and bull cases just represent different possible futures for how widespread that adoption becomes. It's interesting, too, how digital gold is more dominant in the lower scenarios, while institutional money really drives that high-end bull case.
So for you listening, maybe the question is, which of these roles for Bitcoin seems most plausible? Digital gold, institutional asset, emerging market tool. And do ARK's adoption numbers feel realistic? Too low, too high?
Yeah, and what could speed things up or slow things down?
Right, which leads to maybe a final thought to leave people with. ARK's done a thorough job outlining these potential paths based on current trends and known factors. But
the world changes fast, especially in digital assets and global finance.
exactly. So what unexpected things, what developments that aren't in this model could end up pushing Bitcoin's story in a completely different direction by 2030? Something beyond even these scenarios.
That's the really fascinating question, isn't it? What haven't we thought of yet? It'll be interesting to watch.